Good afternoon to members of Perpetual Wealth Focused Superannuation Fund. My name is Catherine Robson and I'm Chair of Equity Trustees Superannuation Limited, ETSL, the trustee of the fund. On behalf of the trustee board and the senior management team, I'd like to welcome you to the Perpetual Wealth Focused Superannuation Fund annual member meeting for the year ended 30 June 2025. I'd first like to acknowledge the traditional owners of the lands on which we meet today and pay respects to elders past and present. Before we commence the formal part of the proceedings, I'd like to run through a few housekeeping items regarding today's online meeting. We've scheduled a question and answer session as the last item on the agenda. We've already received some questions from members and we'll be answering those during the meeting. If you have other questions, please submit these during the meeting. To do this, click on the live Q&A button located on the right-hand side of your screen and start typing your question. The answers to all questions, along with the minutes of this meeting and the recording, will be available on the Fund's website in coming weeks. However, it's important to note that we cannot answer any questions that relate to your personal circumstances in this meeting due to privacy constraints. In this instance, we encourage you to contact the Fund directly. This meeting is being recorded, so if you have any technical issues or you can't stay for the entire meeting, please note that a full recording will be made available to all members within 4 weeks of this meeting on the Fund's website. And finally, information provided in this meeting is of a general nature only and does not consider your personal objectives or take into account your financial situation. If you need assistance, you should either contact the Fund or seek advice from a licensed financial advisor. You can also refer to the product disclosure statement and your most recent annual member statement for further product-related information. Please contact the Fund directly should you need a copy of these documents. Today's agenda has the meeting scheduled to run for about 45 minutes. In attendance, we have a quorum of our directors from the trustee board, along with David Warren, the General Manager of Superannuation Services from Equity Trustees, as well as Gordon Thompson, Senior Manager Superannuation and Retirement Product at Perpetual Asset Management, and Andrew Reeves from KPMG, the Fund's auditor. The agenda for the meeting includes my opening remarks, after which you'll hear from Gordon, who'll provide an overview of the Fund and its key achievements. David Warren will then take us through a perspective on investment market performance and outlook, followed by a trustee update, including the findings of the most recent member outcomes assessment. David will then hand back to Gordon, who'll share some of the planned future priorities and initiatives for the Fund. The board, auditor and presenters will then take some member questions and provide answers. So now turning to my chair remarks. Firstly, I'd like to share some important updates on supervisory and compliance developments that impact trustees and members across the superannuation industry. Firstly, the Financial Accountability Regime, or FAR, which began in March 2025, strengthens how trustees, directors and senior executives are held responsible for their actions. It sets clear standards for governance and conduct so that your fund is managed with strong oversight and transparency. This helps ensure that decisions are made with care and always with members' interests in mind. Another new prudential standard, called CPS 230, began in July 2025. It focuses on improving how funds manage operational risk and maintain strong business operations. It also strengthens how we manage third-party service providers, helping to keep services reliable and your information safe. This helps your fund continue to operate effectively and protect your information and savings even when challenges occur. I'd now like to move to regulatory changes which occurred over the year, beginning with the key rates and thresholds that define our super system. From the 1st of July 2025, the superannuation guarantee reached 12%, completing the final scheduled step of the program that began several years ago. This means that for salary and wages paid from the 1st of July 25, employers are required to contribute 12% of ordinary time earnings to super. At the same time, the concessional contribution cap remains at $30,000 and the non-concessional cap is $120,000. The bring forward limit is $360,000, depending on eligibility. The general transfer balance cap also increased to $2 million from the 1st of July 2025. For members starting their first retirement income after that date, the personal cap is $2 million. But for members already receiving an income stream, proportional indexation applies based on how much of the previous cap has been used. While we don't expect to see the superannuation guarantee increase in coming years, the other figures I've mentioned are adjusted annually to ensure that superannuation limits stay in step with inflation. Further, all of these measures contribute to the purpose of superannuation, which was enshrined in legislation in November 2024 to preserve savings to deliver income for a dignified retirement alongside government support in an equitable and sustainable way. One of the most positive social developments in recent years is the introduction of superannuation on government-funded paid parental leave. As of the 1st of July 2025, eligible parents will receive a 12% super contribution paid into their nominated fund. The Australian Taxation Office will pay these contributions as a lump sum after the end of the financial year in which the leave was taken. This initiative helps to close the gap in super balances between men and women and supports parents who take time away from work to raise their families. Turning to tax settings for very large balances, the government's original plan was to introduce a 30% tax on earnings associated with balances above $3 million from the 1st of July 2025. However, in October 2025, the government announced changes to that approach. The revised proposal would apply to realised earnings only, rather than unrealised gains, and would introduce a tiered rate of 30% for the portion of balances between $3 and $10 million and 40% for balances above $10 million. It's proposed that these thresholds will be indexed, and the proposed start date is now the 1st of July this year. The measure's not yet been legislated and will keep members informed once the law is finalised. Another area of focus this year has been payday super. Currently, many employers pay superannuation contributions quarterly, meaning that employees potentially miss out on super returns in the period between payday and the end of the quarter. Payday super will require employers to contribute to super every pay cycle, with contributions expected to reach funds within just a few days of payday. Legislation was passed in November last year, and the commencement date is the 1st of July 2026. The ATO has published implementation guidance to help employers and funds prepare. These reforms aim to reduce unpaid super and give employees faster visibility of their contributions. As we look beyond these key figures, focus is also on helping members move smoothly into retirement. The Retirement Income Covenant, which came into effect in 2022, continues to inform the way trustees support members in retirement. Each fund must maintain a clear strategy to help members balance income, risk, and flexibility in retirement. Our fund continues to refine its retirement income strategy and expand the tools, resources, and advice pathways that help members plan with confidence. In addition to the Retirement Income Covenant, the government's other key area of focus is service standards, after it came to light that a number of funds were not meeting community expectations around timeliness of death benefit and insurance claims. As a result, the government has announced that it will introduce mandatory service standards for APRA-regulated super funds. These standards will set clear expectations around how funds handle key member services, particularly the timely and compassionate processing of death benefits and the fair and efficient handling of insurance claims, the delivery of clear, respectful, and accessible communication to members and their families. Whilst it might take a number of years before these standards become law, the expectation is clear. Superannuation is more than just an investment vehicle, and members should be able to expect quality service from their fund. At a system level, cybersecurity continues to be a key area of focus across the superannuation sector. Super funds hold sensitive personal and financial information, which makes them a very attractive target for cybercrime. Across the industry, trustees are expected to maintain strong governance, controls, and incident response arrangement to protect member data and assets. Regulators such as APRA and ASIC continue to emphasise the importance of cyber resilience, including system security, third-party risk management, and clear communication with members if incidents do occur. Members also play a really important role in protecting their own information by using secure passwords and remaining alert to scams and impersonation attempts. Alongside cybersecurity, artificial intelligence is increasingly being discussed across the financial services industry, including superannuation. At an industry level, AI is generally viewed as a tool that can really assist with data analysis, operational efficiency, and member communications, but only when used appropriately and responsibly. Regulators have made it clear that the use of AI does not remove trustee accountability and that decisions affecting members must remain fair, explainable, and compliant with the law. As this area continues to evolve, trustees are expected to apply strong governance and risk management to any use of advanced technology. All of this change is important to see in the broader context of consolidation and growth across the industry. As of June 2025, total Australian superannuation assets reached approximately $4.3 trillion, with around $3 trillion held in APRA-regulated funds, such as this fund. The industry continues to merge and consolidate to achieve greater efficiency and scale, which brings benefits for members through reduced costs and improved investment opportunities, while also increasing expectations for governance and service. Before closing, I'd like to remind all members to take time to regularly review your super. Check your balance, your insurance cover, and your investment settings. If you're planning parental leave, make sure your fund details are up to date. And if you have or expect to reach one of the new proposed thresholds, consider how the proposed tax changes might impact you. For personalised guidance, please contact the fund or seek professional financial advice from a licensed advisor or tax specialist. Thank you for joining us today. I'll now hand you over to Gordon Thompson, Senior Manager, Superannuation and Retirement Product at Perpetual Asset Management, for further information about the fund. Thanks, Gordon.
Thank you, Catherine, for that update. I'd now like to take a moment to give you a brief overview of the fund and highlight some key changes over the past year. As of 30 June 2025, 8,202 members have chosen the Perpetual Well-Focused Superannuation Fund for their retirement savings. Collectively, you hold $1.5 billion across our super and pension plans, which brings the average member balance to $183,000. To help you grow those balances, we offer 29 investment options. These range from a cash and a conservative multi-section option through to specific equity options. You also have a choice of investment expertise with access to our internal Perpetual investment teams alongside several other leading investment managers. Beyond the investments, we focus on ease of use and security. Our online portal allows you to manage your account and track your progress 24/7, and through our insurance partner, you have access to life, TPD, and salary continuance cover. Finally, we support you through every stage of life, offering a super plan for those still building their wealth and a pension plan to provide a steady income once you're ready to transition to retirement or reach retirement. Lastly, the promoter of the fund is Perpetual Investment Management Limited, and we work closely with the fund's service providers and the trustee to deliver the best possible outcomes for our members. The 2024-2025 financial year involves several significant changes for the Perpetual Wealth-Focused Superannuation Fund. These included a change in the fund's trustee and the transition to a new registry service provider. These changes were intended to align the fund with specialist service providers and to utilise their scale in governance and administration. First, Equity Trustees Superannuation Limited was appointed as the fund's trustee effective 1 March 2025. Equity Trustee provides trustee services for a number of superannuation funds, which allows the fund to access their governance framework and resources. Perpetual continues to provide investment management and administration services to the fund, and the custody of assets remains with a specialist third-party custodian. Second, in May 2025, the fund transitioned its registry services to MUFG Retirement Solutions. This transition occurred as the term of our previous registry arrangement concluded. Following a thorough due diligence process, MUFG was selected to provide the fund's long-term administration and technology requirements. As a result of this transition, the former My Perpetual online portal has been replaced by a new member portal managed by MUFG. This portal is the primary platform for members to view account balances, update personal details, change investment strategies, and download statements. For those who have not yet accessed the new system, registration can be completed online or by contacting member services. Shortly, I will share with you our fund strategy and key focus areas. However, for now, I'll hand you to David Warren, General Manager of Superannuation Services at Equity Trustees, to take you through the Trustees Update.
Thanks, Gordon, for the fund update and importantly for the achievements and benefits delivered for members over the past year. Now, I'd like to share with some important updates on the Retirement Income Covenant, investment markets performance, and the results of the most recent member outcome assessments undertaken. So starting off with the Retirement Income Covenant, this continues to guide how funds support members who are moving into retirement. In June 2025, APRA and ASIC collected data on the retirement phase, and they are now encouraging funds to take faster action to make sure members are well supported as they retire. The covenant requires funds to do three things. Firstly, to help members maximise their expected retirement income so they can have the highest possible income throughout retirement. Secondly, to help members manage risks to the sustainability and stability of their income, including the risk of outliving their savings or changes in the market. And lastly, to provide flexible access to funds so members can choose how and when to use their money during retirement. The introduction of the Retirement Covenant aims to help funds better understand members' retirement needs. It also helps members plan, prepare, and feel more confident about their retirement. As part of meeting this covenant, your fund has published a retirement income strategy, and we encourage all members to read it and to understand how it can support you in preparing for retirement. Over time, the fund will make available tools, resources, and support to help you identify your retirement needs and know where to find help. This may include educational materials, reminders to review your super at key milestone birthdays, or professional advice for a more detailed plan. Everyone's idea of retirement is different. Living your ideal lifestyle in retirement requires planning. Taking time to plan can make a big difference in helping you feel confident and financially ready for your retirement. So if we now move on to investment returns, before we get into the details of how different markets performed over the past year, it's important to note that you or your financial advisor would have elected how your superannuation is invested in the fund based on your own risk profile. The fund offers a comprehensive investment menu with many investment options. And this is a general update on the overall investment performance across the superannuation industry. I want to take a moment to remind everyone that super is a long-term investment. For most members, it's an investment that can stretch over 40 years or more, from the time contributions begin to when retirement income is drawn. While it's important to look at what has happened in markets over the last financial year, because this is, after all, an annual members meeting, the real focus should always be on the long-term picture. 1 year is just a small part of your total super journey. Over the 2025 financial year, both global and Australian markets delivered strong results, despite ongoing economic uncertainty and fluctuating investor sentiment. The year highlighted the importance of resilience, diversification, and a long-term approach to investing. Moving on to asset classes, Australian shares performed well, returning 13.8% for the year. The result was supported by strength in the resources and energy sectors, which benefited from steady global demand and solid commodity prices. There were periods of volatility early in the year as global growth concerns weighed on sentiment, but confidence improved in the second half, helping to lift overall returns. International shares delivered an impressive 18.6% gain. The United States led global markets, supported by strong corporate earnings in technology and related sectors. Europe experienced more modest results, while emerging markets were mixed due to currency weakness and slower growth in several regions. These differences across markets highlight the value of maintaining a globally diversified portfolio. The Australian listed property sector returned 13.8% for the year. Industrial property remained a key driver of performance, supported by demand from logistics and e-commerce. Retail property also showed improvement, helped by stabilising consumer spending and easing cost pressures. The sector benefited from both yield compression and stronger rental growth. Australian fixed interest returned 6.8% for the year. The environment remained challenging as interest rates stayed high for most of the period. The Reserve Bank of Australia maintained a firm stance to keep inflation under control. But towards the end of the financial year, expectations of future rate cuts helped support bond prices, resulting in a modest positive return. Cash investments provided stable and predictable returns of 4.2% for the year. With interest rates at their highest levels in several years, cash continued to play an important role as a defensive and low volatility asset within diversified portfolios. The results across asset classes this year remind us that markets move in cycles. Some sectors will lead while others will lag, but together they demonstrate the benefit of diversification. A well-constructed portfolio spreads risk and helps investors stay on track through different market conditions. All investments carry some level of risk. It's important to understand your own risk profile and how much fluctuation you are comfortable with. The trustee continues to provide a broad range of investment options, allowing members to choose the level of risk and return potential that best suits your own personal circumstances. Looking at the investment outlook, looking ahead, the main forces likely to shape financial markets over the coming year are inflation, interest rates, economic growth expectations, and geopolitical developments. Domestic monetary policy remains in focus. The Reserve Bank of Australia is walking a careful line between supporting economic activity and keeping inflation under control. That said, the global environment is layered with uncertainties, from trade policy frictions, conflict in the Middle East and Eastern Europe, and potential shifts in US domestic and foreign policy, which has elevated geopolitical risk, which remains a major wildcard. Investment markets generally dislike uncertainty, and this means we should expect periods of increased volatility and the possibility of muted returns. Having considered the broader investment market environment, we'll now turn to member outcomes and how the fund has performed in practice. So each year, we complete a member outcomes assessment to provide transparency to members on how the fund's products are performing and whether they continue to operate in members' best interests. The last assessment was completed in the 2024 financial year under the fund's prior trustee, Perpetual Superannuation Limited, and we are currently finalising the 2025 member outcome assessments for the fund, which will be published in March. The member outcomes assessments consider a broad range of product attributes, including investment risk and return, fees and costs, insurance claims management, member engagement, scale, and an overall product assessment rating. Using a rating scale, the assessments provide the trustee's perspective on how each product compares with similar products in the market. All current assessments are published on the fund's website to ensure transparency and to support members in understanding your superannuation arrangements. From a trustee's perspective, these assessments provide an important opportunity to evaluate the sustainability of the fund and the outcomes being achieved. And for members, the assessments offer relevant information to consider in relation to your own superannuation savings. In the latest review, the prior trustee completed a total of 14 assessments across 2 products. Of these assessments, 12 met or exceeded the prior trustee's target levels, and 2 were below target, but remained within the prior trustee's tolerance level. There were no outcomes assessed as being outside of the prior trustee's tolerance levels. Overall, all assessed outcomes were determined to be within the prior trustee's tolerance and continue to be suitable for members. Now, while the trustee and Perpetual perform different roles, the partnership is underpinned by a shared alignment in serving members and delivering the best possible retirement outcomes. And with that, I'll hand back to Gordon, who will share an update on what we can expect in the year ahead for the fund, and we'll finish off with some questions and answers. Over to you, Gordon.
Thanks, David. I'm excited to share our priorities for 2025-2026. As I mentioned earlier, the past year involved significant change with the transition of trustee to ETSL and the registry services to MUFG. Our priority for the current year is to focus on stability and delivering benefits to members from these updates. I'll now take you through the key focus areas for the year. Starting with member services and portal functionality, the primary focus is the continued embedding of the MUFG registry system. This includes the ongoing development of the member online portal. The objective is to ensure that members' instructions are processed in an accurate and timely manner, and that the digital interface provides the necessary functionality for account management. We continue our focus on governance and regulatory compliance, where we are working with equity trustees to manage the fund's operational risks. A core priority is the oversight of critical service providers to mitigate the risk of service disruptions. It's important we support you with your retirement needs, and given the shifting demographics of our membership, we're maintaining a focus on resources for those approaching or in retirement. The My Retirement section of the website remains a central repository for educational materials regarding retirement income management. We will continue to update these resources to reflect current legislative and tax standards. Our final key focus area is on investment monitoring, and as mentioned earlier, we have a combination of leading investment managers managing the investment options available for members. For the investment options managed by Perpetual, Perpetual's investment teams will continue to manage the underlying assets according to their disciplined long-term approach. From a governance perspective, Equity Trustees is responsible for the ongoing monitoring of the investment menu. This includes a review of the investment governance framework to ensure it continues to meet regulatory standards and member outcome requirements. That concludes my presentation for today. I will now hand you back to David Warren. Thank you.
Thanks for that, Gordon. So that finishes our formal presentations for today. We'll move into a question and answer session. And this is an opportunity to address some of the common questions we've received from members, covering topics such as investment markets, risk management, and how the trustee supports members in key areas. And noting that we're unable to answer any questions that relate to a member's personal account details or circumstances for privacy reasons. Okay, the first question. Do the Shield and First Guardian matters impact upon our fund? We understand reading about situations like the Shield and First Guardian can create concerns, but we can assure you there is no impact from these matters to you or your fund, or to the day-to-day operations of the fund or the services we provide to you as trustee of the fund. We appreciate this situation has been deeply challenging for those affected. We have clear ideas for regulatory reform, and we are working with the key industry bodies and the regulators on this. We are respectful of the ongoing regulatory examination of the issues, and we remain deeply committed to supporting them and have a robust confidence in the superannuation system. The ETSL board is committed to acting in members' best financial interests and takes its compliance obligations seriously. Okay, next question. Now that Perpetual has transitioned the fund administration to MUFG, will we see future website improvements? The features are lagging behind other providers. For example, the site is still slow and doesn't have much detailed data specific to our positions, such as lifetime performance, ROI, etc. There is also no mobile app. Gordon, can I throw this question to you, please?
Thank you for your question, and I can confirm that there will be website improvements over the year. While the current focus is on enhancing the platform's overall speed and streamlining the user interface, I want to be transparent that individual lifetime ROI metrics are not in the pipeline. Regarding mobile access, while we don't have a dedicated app, MUFG's mobile responsive technology ensures that the portal is fully optimized for your phone's browser, giving you an app-like experience.
Okay, next question. What is the trustees' view on the investment market outlook given growing global uncertainty? So investment markets continue to operate in an environment influenced by economic uncertainty, inflation and interest rate changes, geopolitical tensions, and ongoing technological change. These factors can contribute to periods of heightened volatility and short-term fluctuations in asset prices. The trustee acknowledges that uncertainty is a normal feature of investment markets and that outcomes cannot be predicted with certainty. Superannuation is typically a long-term investment, often spanning decades. While short-term market movements can affect account balances from time to time, the trustee's approach is designed to support members' long-term retirement outcomes rather than react to day-to-day market changes. This involves offering a range of investment options with different risk and return characteristics and maintaining diversified portfolios across asset classes, regions, and sectors. Again, members are encouraged to consider their individual circumstances and to seek professional advice if they're unsure. Okay, final question for today. What is the trustee doing to ensure that claims are managed and paid efficiently for members? So the trustee places a strong emphasis on the fair, timely, and consistent management of claims. Claims processes are designed to operate in accordance with the relevant trustee, policy terms, and legal and regulatory requirements, while also recognising the importance of clear communication with members throughout the process. The trustee oversees claims governance and works with administrators, insurers, and service providers to support efficient claims assessment and decision-making. Performance and service standards are monitored and processes are reviewed periodically to review opportunities for improvement. Okay, that's all the questions we'll address in the meeting this afternoon. We'll respond to all questions that were raised, including those covered today, and include responses in the minutes of the meeting. We sincerely thank the members who asked questions. I'd now like to hand back to Catherine for her final comments and to close the meeting. Thank you, Catherine.
Thanks, David. And thank you for your time and attendance today. We hope that you found the meeting both useful and informative. As David mentioned, a video of this meeting minutes, and written responses to all the questions raised, including those which we have not responded to today, will be available on the Fund's website within 4 weeks of the meeting. Thank you, and wishing you a wonderful day. Goodbye.